What's going on, y'all? Zach and Spence here from iTrendz Trading. We're coming at you guys with another watch list. This is our CPI watch list. We're going to be going into a little bit of our thoughts on CPI, where we think QQQ and the Dow can be heading, and then also some trades that we're going to be looking at today. So let's get right into it. As you guys probably saw from today, if you traded at all today on Wednesday, and today is the 12th of October, it was very lackluster. It kind of sucked. It was complete choppiness. It was straight sideways. We did have a PPI report that was released earlier in the morning, and that didn't really do us too good. It definitely showed a little bit of weakness, continued weakness, I should say, in our economy. We've got year over year not breaking our expectations, but a little bit lower than our previous year over year read, which is good, but very marginally lower. So in all essence, it really was unchanged, if anything. And then our month over month was actually a little bit higher than what we were expecting. So that's not good. So that's definitely not good to see. That kind of leads both Spencer and myself to believe that that's going to be a similar pattern coming with CPI, and we're going to know tomorrow morning at 8:30 in the morning Eastern. But likely to see a higher read in our month over month inflation, maybe a little bit down in our year over year. But if we get a higher read in a month over month and a higher read on year over year, that's not going to be so good for markets. And it could actually bring us a little bit lower. Not like it's going to shift us like it has in the past, but it could come as a shock to the market and absolutely drive us a little bit lower for sure. So that's a really important thing to note before we get into any trades, is that tomorrow is CPI, 8:30 in the morning. That's going to impact all of the trades that we're about to go over. So just make sure that you are adjusting your levels. For me personally, I personally set my levels as if we had a good read or a bad read on CPI, so above and below levels on those. So hopefully they will make sense. They're going to be a few points up further away than you would normally look for on an above and below, just anticipating that the CPI is going to throw us one way or another. But without further ado, I'll pass the mic to Spencer, and he's going to go into some of his trades and his QQQ outlook as well.
So first off, we'll start with QQQ. For me personally, I'm looking for larger moves here in the index. We did have a little tight trading range, really sat at the 262.5 level almost all day today. With CPI coming in, we're looking for two major breaks in either direction. I'm either looking on a top side, looking at an upside target of 280 over 265.72, or potentially on that bottom side, looking at 253 under 261.86. It's going to be really important here to see what CPI does as far as how far the number's off. But we have to start trading in the mindset that we're going to be stuck in this range for a little while longer. So this 280 to 250 level is pretty much this new range that Zach and I were talking about here at iTrendz that we're looking at kind of staying in and getting adjusted to. Not saying we can't break lower. There could be catalysts coming up, just like the November 18th Fed meeting coming up. We also have earnings, which could potentially be a catalyst in either direction. I think that the recent earnings that have come out on the tech side have all kind of been in that negative direction. You saw AMD take a big tumble, but if you're sitting on those consumer staple products, just like a PepsiCo or a Hershey's with pricing power, those have seemed to be holding up, and those are going more defensive names. So just kind of keep an eye out. We still see that rotation into defensive names because those with pricing power tend to be holding up higher. Now, something I do want to point out, one of my next trades is Disney. This is an interesting one just because if we do start having a slowdown in the economy, this is what I'm looking for. On a daily level, I'm looking over 94, going to a 95 call. Or if we do break this 92.85, which has been a pretty hard pin, I'm looking under 90. With Disney, I do want to take a little bit of time, so I will go out to those monthly expiries for October 21 when I'm looking at a 95 or a 90. But I think here is a really important level for Disney, either to start regaining that 100 or potentially break down to 87 before bottom for me, looking more to add it to a share position around $78. But for that day, I'm looking over 94, going towards a 95. If we open up higher, I'll be looking potentially all the way up to 97 call. And for Disney on that bottom side, I'm just looking to stay at that 90 break because when you get under there, it definitely is a little sticky, so just kind of be mindful of that. My next trade is ARK, and ARK's been interesting here. Got under that 40 level, couldn't regain it, stayed under 38. So I'm looking over 36.45, potentially pushing back up, going towards these larger volume shelves back up over towards 38. Or if we could break 35.75, I'll be looking to take something close to the money, most likely a 35 put going lower. Or I'll be looking even farther out, maybe in November, going towards a 30. There were a lot of open interest going farther out on those strikes all the way out in November, going all the way down to 24, which was kind of interesting to see. But Kathy did up her position in Tesla. That's also the next trade we're going to go over. And so this is kind of just one of those innovation names that if these companies that are potentially providing a tech area or relevant product, we've seen a lot of big hits. So, I think that this innovation fund could be in a lot of trouble here. We're going to go over to Tesla next. For Tesla, this is a really interesting fall. Could regain your 230. I'm looking over 217.20 for 220s and under 215. We're really breaking down towards that 200 level. Tesla lost a lot of support, and with Elon having to buy Twitter, I just think that this name is going to continue to dwindle down. You break under that 200 level, 190 before it gets even gross. But we're looking here close under 215. We're going to take some close to the money puts out over 217. Then we're going to battle at that 225 range, kind of that psych level. But it'll be interesting to see if Tesla can hold here or if it's going to continue this fall down. You can see a giant M actually on the chart that Zach's showing right now. It's kind of just big pattern playing out. So if we get towards this neckline a little lower, we could see a bounce just because we're going to be approaching that psych level of that 200, the 205. So just interesting to watch the breakdown there. And then another trade in the automotive sector is LI. LI have traded these contracts the last couple of weeks. A lot of volume when it's going in either direction. This has been creeping up towards this 21. And we saw right here, you can see on this chart, it's kind of where this kind of rejected and didn't push over. Had a big breakthrough under 25, which we took advantage of. So I'm looking over 21 to probably take something right close to the money, right at that 21. But if it could break down under 1981, I'm looking at an 18 and a half put and potentially pushing all the way down to 16. So there's two ways you can play that. You can play the 18 and a half weekly or go out to November and take a 16. So just kind of either direction. But other than that, I'll go over one more, which is actually Meta. And Meta is, all the rage right now because of their headset that just came out. If you're looking at Meta based off of their services and they're based off their advertisement, this is the same valuation you got in 2018. So just keep in mind they have more revenue and they have more clients, and you're getting the same valuation that you got in 2018. So just kind of something interesting to point out there. That being said, they're also taking criticism because what are you doing in the metaverse currently? Not a whole lot. They're trying to pitch companies to come into the metaverse. So that'll be something something easy to see from a fundamental standpoint. It is getting attractive, but with that kind of negative cloud hanging over, kind of hard to jump out of. Kind of like when you're looking at semiconductors where they're fading AMD and going long NVIDIA. You have that negative cloud, it's kind of hard to get out of your way, even if it's seeming like it's a valuable point when it comes to a fundamental standpoint. You really just got to be careful. For Meta, I'm looking over 130, playing something close, under 126.32, looking at a 125, playing it kind of close to the belt. But you saw this line that Zach just drew, just can't break over. It just seems to continue to fall down. Essentially, you're magnet all the way down towards that 112, 113 area. So it'll just be interesting to see. But from a fundamental standpoint, some of these stocks are getting interesting. That being said, you want to avoid the negative catalyst coming in to the end of the year because a lot of companies are positioning themselves already for next year and kind of letting this year go towards a wash. So it's kind of something interesting. We want to keep an eye out for companies that they're cutting jobs, cutting estimates, just like you saw Intel cut more jobs today. You also saw the union fight with Uber and Lyft potentially changing their structure of the company. Just kind of take all these with a grain of salt, take in your mind what's going on, and just be mindful of the events that are happening. With the, like Zach said, with the CPI, just be mindful of the direction it pushes in either way. But just know that we could be trading in a tight range where we're at for a while. And with the 10-year and the 2-year pushing towards high, yeah, the dollar kind of broke down towards the end, but VIX is still pushing close towards that 34, 35. And that's kind of that 35 level is the trigger of panic. So just be mindful of that as well. So with that, I'm going to pass it back over to Zach.
Yeah, those are definitely some really good points. I think on, Sunday we talked about this inside of our Discord. This is a good time to plug that. We do leave the link in the description. We host a market prep session 2 times a week, every Sunday and Wednesday at 9 p.m. Eastern. That's open and free to the public, where we go a lot more in depth than we do on these videos. It's usually an hour to an hour and a half session. But on that session this past Sunday, we were talking about, okay, if the VIX is going to stay above 30 here, we're probably going to see a little bit more selling pressure in the market. We might not necessarily move until we get over that same level that Spencer was just talking about, that 34 or 35 in the VIX. We might not see a drastic drop, but we'll have this slow movement to the downside. Now, underneath 30 is a level that we're looking at for continued buying in the market, where we might actually see a little bit of a relief rally, right? We're not talking about a reversal or anything, but we're talking about just a little bit of a relief rally. So that's definitely something interesting to keep your eye on, and definitely important what Spencer just brought up. So some of the trades I'm looking at AMD, Amazon, and coin. So first we're going to look at AMD here when the chart loads. I typed it in wrong, that's why I didn't load. So what I'm looking for here is I'm really looking for I'm trying to think about the movement in CPI. So for example, let's go to Dow futures here. The movement CPI, right? If we get a bullish reaction off the CPI, I'm looking for the Dow to move up towards 30,000, not necessarily open up at 30,000 at 9:30, but move up towards this 29,650, 29,7 area, and then blast through 29,750, and then move towards 30,000. If we get a bearish reaction, we get a higher month-over-month read, then I'm looking for us to break 29,000, actually come down to essentially this daily, this large high time frame zone that we didn't really truly touch. We almost touched it, but we didn't truly touch it. This 28,500. That's where I'd be looking for the downside target. My applicable buys would be above this 29,700, and my appropriate, not appropriate, but my desirable, I should say, sells would come underneath this 29,000 level. And essentially that's what I'm looking at for CPI. I trade a lot of Dow futures. So that's why I'm focused on the Dow, especially recently. If you're inside of the chat, that's why I'm also focused on the option side. I'm just trading the Dow, but I do have some other trades that I'm looking at here as well, and to bring to you guys today. So above this 58.90 area, essentially this 59, I am pretty interested on AMD back up to these 62 levels. Now, if we did have a good reaction on CPI, we'd likely push much higher towards the 60. I'd be looking for any type of pullback. Again, on a good reaction, we'd need something like a lower month-over-month number and just marginal, just a little bit. All I need is a little bit of a lower number on the year-over-year, but definitely a lower number on the month-over-month. And then I could see us gliding kind of back towards the 62. AMD is also fairly oversold here. It's definitely very, very oversold. It's definitely getting hurt. So a relief rally with, confluence in the market could produce a nice little rally inside the stock here, back up to the 62.50 level. So that's what I'm eyeing here. On anything underneath this 56 is what I'd be looking for shorts. I actually don't have an identified level necessarily. My next zone is this high time frame zone at 51.50 to 50, I believe. Let's take a look at this. 51.50 to 50 zone. Let's see. We're at the 55 here. What else do we have inside of this structure? That's really it. I mean, it's kind of this 51 to 50 zone. So if we get a bad reaction off CPI, that's exactly where the stock is going. At that point, it'll be so oversold. I'm going to have to buy some longer dated calls, maybe for a couple day run up into earnings. I mean, that's kind of crazy, but look at all this consolidation that we got going right here. We got doji, and a little bit of a doji / hammer candle coming in here. Really, really interesting. We're getting super oversold at these levels. What about this weekly? I never actually saw. Almost oversold in the weekly as well. So anyway, hopefully you guys understood that. Above this 59 towards 62 and below this 56. As for contracts, so just be looking at weekly contracts. Probably would be looking at the 60s or the 60s ones, given that we're going to be above that 59 level. So this is basically at the money. Or underneath that 56s, I'd be looking at the 55s. Looks like everybody's at the 55s. 55s or 54s, probably stick to the 55s. Now moving to Amazon here. So Amazon, this is kind of what I'm looking for. I'm basically looking for a break of these lows right here. This 111.50 area, this 111.50, this 112, for us to push back down towards this 108.85. Or I'm looking for above this 115.40 area to push towards this 118.14. Amazon, of course, is a much stronger company than most in the market. Obviously, they're a big tank. They also just had their Amazon Prime Day yesterday and today. Hopefully, you guys took advantage of some of those tech deals. There's some pretty big discounts on those tech deals. But for that reason, if there is a good reaction off the CPI, we could see also a combination of that good reaction there, and then also potentially a good release news piece on how well they did on their Amazon Prime Day or something like that as well. So for the contracts, what I'm looking for here, I'm looking for the 115s for the upside there, or I'm looking for these 110s. I do like those 110s a lot, actually. Lots and lots of volume. And that's a fair price. They'd probably be a little bit more pricey, probably closer towards $180 underneath that 112, 111.50 area. But the 110s look like they're very, very nice so far. They've got a lot of volume, and it looks like everybody's flocking towards that. So the last trade that I have here to bring you guys is coin. This is the lowest on the totem pole, though. So Amazon and AMD, AMD, then Amazon, then coin. But this is a pretty interesting setup. You've got this big symmetrical forming right here. And really all stocks right now have a big symmetrical because of the last few days of chop. Realistically, we haven't gone anywhere. So most stocks have a symmetrical and or slight wedge, whether it's a little ascending or a little descending. But this is basically the basic formation that we've got in all stocks here. But underneath this 65, it's gonna get pretty bad for coin, at least down to 60. But underneath 60, you really don't have much stopping you until about 54-ish zone, 54, 55, and then continue all the way down to this 45, 44 zone, which is really nice to see. And then above this 75 is essentially what I'm looking for. I know that these are 5 points in either direction, but again, CPI is going to swing us pretty high. So if we have a good reaction, I'm looking for us to see above this 75. Okay, we hold above this 75. I'm interested in taking it another 5 points higher towards this 80 zone, and then vice versa again. If we have a bad reaction underneath this 65, I'm interested in taking it down to 60. So we could see a little bit bigger of a slide if we do get a bad number, that's for sure. Last CPI was definitely no joke. I think we had a 4 and some change % day that day, a down day, 4 and some change down. So that was definitely bad. So on the contracts, I'm looking at 70. Probably just go right with the 75s. I'm trying to see what it would look like at the money. It would probably be closer to this high twos range at that point in time. 75s. This one's a little difficult because we're going to be so far from the strike price that we're at right now. I do like the 75s for sure, but if you wanted a little bit cheaper of a contract, I usually go with the 77s or the 78s. 77s look to have more volume than the 78s right now, so just pay attention to that. And then on the downside here, again, I do like these 65s. Probably stick with the 65s. Again, if those are too pricey for you, move to like the 63s, and those will be about a little bit under $2. It'll probably be. But these 63s look pretty nice here. 65s and 63s, and then 77s and 75s for the coin chart. So hopefully you guys got a lot of value out of that. We try to make it nice and concise and keep your head on a swivel for a CPI report, 8:30 in the morning Eastern. That's going to shake up the market. So if you guys swung anything, I'm praying for you guys that it goes in your favor. But if you're not comfortable trading in high volatile environments like CPI days or even just this week because we got a lot of news coming out, then never hesitate to not take a trade if you don't really want to take a trade. Sometimes it's better just to stay out of the market and just be a watcher. Just watch what the market's doing and then come back next week and be a participant. You know what I mean? So anyway, if you guys are interested in joining our session, which we're about to do in about an hour and a half right here, hour and 15 minutes, where we do, again, go a lot more in depth. We talk about a lot more things, and we open the floor up to you guys where we allow you guys to ask your questions and or look at specific tickers that you want to look at. The links are in the description. If you did like the video, please give it a thumbs up and a subscription. We really appreciate it, and we will see you guys next time.